G'day guys, I'm going to be talking to Patrick Smith. He's a Long Island City broker and new development specialist. I'm going to be talking to him about the condo market here in Long Island City. Patrick, thank you for joining me today.
You're very welcome. How are you, Christian? Thank you for having me.
Oh, great to have you. So listen, the New York Times did a big story July 3rd. You were quoted in it, and essentially it was talking about the Long Island City condo market being saturated. The article talked about, there being 2,000 condo units built since 2018. 60% of them remain unsold. So given that, what's your outlook?
So the market has categories based on price point. So developers who are seeking, let's say, $1.5 million to $2 million for very tiny apartments, they're going to have a difficult time in this market. And we see that in the reopening sales. 75% of the new sales have been for properties priced below $1 million as opposed to 1 million plus or 2 million plus. So it truly is a matter of proper pricing.
Okay. I mean, what proportion of the market is $1 million and below? And what type of product are we talking about in terms of that type that's in demand?
The properties that are in demand right now are one-bedroom apartments that go for between $800,000 and $900,000. Studio apartments that go for between $600,000 and $700,000, and two-bedroom apartments that go for between $1.2 and $1.4 million. Mm-hmm. And those two bedrooms tend to be more than 1,000 square feet. And where you really start to see a drop-off in demand in Queens and in Long Island City is when you start to get into the two-bedroom, two-bath category that's priced north of $1.5 million, and you have less than 1,000 square feet.
Right. Okay. So given that, I mean, we often hear about, well, we're hearing right now about a glut. So you think that there's sections of the market where there is a glut and sections of the market where we're going to see a good amount of demand equaling supply. Is that the way you're seeing things?
Yes. And the other change that has happened since the reopening is there is a demand for smaller boutique projects, 4 to 6 stories where you might have a single elevator or you have a stair and you only have to walk, you only have to walk up 1 or 2 flights. So that gives people flexibility, and those buildings usually have setbacks, and the ground floor units are usually duplex to the basement with a very large backyard. So we are seeing great demand for boutique projects that have private outdoor spaces.
Right. Okay. In terms of price movements, though, you talk about these categories. What sort of price movements are we seeing in that $1 million, one bedroom market versus, say, the 2-bedroom 1.5 market? Are we seeing like 10% movements, down, or what are we seeing?
Yeah, it's a little bit early right now, but we do have some experience which to go on. It's not quite 10%. We've helped clients recently where we've negotiated a 5% discount in a new development on a 2-bedroom, and the developer agreed to some incentives, transfer taxes, sponsors attorney's fee, mansion tax, paying for carrying charges for a year. So a combination of incentives and somewhat of a price reduction, but also you have to go back to proper pricing. There was a resale unit listed in one of the better buildings west of Vernon Boulevard recently. It was listed in the low 1,000s, like 1,050 per square foot or some such number like that. And the apartment found the buyer immediately because it was a good size apartment, 2-bedroom, 2-bath, and it was at a very, very attractive price per square foot. And it went to contract very quickly. So the level of discount is also a function of where the last asking price is. So if you have an apartment that's been overpriced, that apartment will by definition need a greater listing discount. So
Mm.
you really have to evaluate each building and each listing individually to see what listing discount is required. But we're seeing, 5%, 6%, 7%, and then for apartments that are priced well, you might see 2 or 3%.
Right, but everywhere we're seeing some level of discount. Is that what you're saying?
Yes.
Right.
Yes.
So there's about 1,000 unsold condos in Long Island City at the moment. How long do you think it'll take before the market absorbs all of those? I mean, I know you talk about categories, but just in its totality, how long do you think it'll take? 3 years, 4 years? What are your thoughts, Patrick?
Yeah, I think that we've already seen one project where the developer had about 75% sold, and they are beginning to offer some of the units as rental rather than condo. So they've taken some supply out of the condo market and put them into the rental market. And that project, by the way, is a very successful project. They're 75% sold. The construction loan is paid off, but the developer there feels that by holding them as rentals, they'll have a better outcome in the future, which of course is also a vote of confidence for Long Island City. So I think we will see some projects that are maybe not suitable at the prices that developers are currently asking, possibly go to rental. And then I think you're going to have other developments that have great locations: Vernon Boulevard, Jackson Avenue, 48th Avenue, and you're going to have, you're going to get absorption within, depending on where the project is, within the next, say, within the next 18 to 24 months.
Right, so the supply is going to be sort of gobbled up between developers taking it off the market and turning it into rentals, and then the choice locations, sales taking place there. And I guess the third component is the pricing mix of around $1 million. Though that'll probably account for a good chunk of what's out there. Is that kind of what you're saying?
Yeah, that's accurate. And I think also, historically low interest rates are very helpful as well.
Do you think now's a good time for people who want to buy in Long Island City? Say, for instance, you're a couple and you want to get a piece of Long Island City. Is now a good time for that?
It is a good time in the sense that you have record low interest rates and you're competing against fewer buyers, and you have a great selection of properties in which to choose from. So we're seeing tremendous demand from people who are currently renting in Long Island City, who know the neighborhood and who have waited on the sidelines, and now they're looking at this as their opportunity to get in and to get a good deal.
And do you think they can get a good deal? Is there a lot of negotiation room for them?
Yeah, I think they can get a good deal. They can get a very good property. You're going to buy in a new development where the sponsors in a market that's favoring sellers rather than buyers. You could, the sponsor would ask you to pay for their transfer taxes and pay for their own attorney's fee. So in a market like this, the sponsor's paying for their own closing costs, and the sponsor's going to pay for some, if not all, of your closing costs, and you might get a good discount on the apartment, 3, 4, 5, 6%. And you'll have pick of the litter. You'll be able to go into one of these buildings and say, hey, I want a 2-bedroom, 2-bath with 1,200 square feet, and I want a south-facing setback terrace. And perhaps in the past, they would tell you that unit is not released yet. We release that at the end after we do, now they're much more flexible. So I think, for those buyers who are in the market today, there is a lot of opportunity.
Are you hearing buyers saying, I'm going to sit it out, I'm going to stand on the sidelines, I'm going to see how it all pans out in the next 6 months? Are there a lot of those people out there?
Yeah, you have some buyers who are cautious, but you also have a lot of deals getting done. So just like the when we were discussing the buildings, it's very hard to generalize or broad brush the market. So you have, I think you have buyers who fit into that criteria that you just mentioned, and then you have people who are out there pre-approved, and they're ready to negotiate and ready to buy.
Right. Okay. And just to sort of finish up, I want to talk about the resale market. What are you telling people that, have an existing condo, probably on the Hunters Point waterfront? What are you telling them in terms of, putting their place on the market, how they should go about it, and how are you handling their expectations?
So it's proper pricing. It's very important that we as agents provide objective um, advice and pricing analysis to our seller clients, even if they don't want to hear it. Some of the resale buildings they're facing higher common charges as the buildings age. So you need more money to fund the ongoing operations. You have higher real estate taxes as the exemptions begin to phase out,
Mm-hmm.
and you have increased competition from the new development. So if there's a motivated seller in the resale market, they simply need to price the apartment well to begin. You don't want to go into the market today where you're overpriced and the apartment languishes on the market for an extended period of time, because you'll have to reduce it and you won't get as much activity. If you go in with proper pricing and you're pricing it to what the market is today, you would sell it in a reasonable time frame. And what's interesting about the resale market is that you had people who were purchasing in Long Island City in 2006, 2007, 2008, 9, 10, and they were buying at $600, $700, $800, $900 a square foot. So if the market went from $1,300 a square foot to $1,250 or to $1,200, these people have 75% of the market uses mortgage financing. So they've had a decade plus of amortization of their mortgage. Mm-hmm. So for them, even if they have to sell for a little bit less, they're still doing very well.
Okay. All right. Well, on that positive note, thank you for joining me today, Patrick.
Thanks, Christian. Great speaking with you.
And you too. All right. Bye.